Rudi Fronk, CEO and Chairman of Seabridge. Nice to speak with you on the sidelines of Gold Stock Analyst Day here.
I think, Daniela, it was 2 years ago where we had our last interview, so it's great to be back in person.
First, really want to get your thoughts on the current precious metals landscape. A lot of questions coming in about why gold is not performing better than it should be given the geopolitical context we find that ourselves in. Any thoughts on this, Rudi?
I think a lot of it still has to do with the investing public having confidence in the Fed. And if you can make money in the stock market like you have over the past few years, there's no need to own gold. Although I would point out that since our last meeting, I think gold is up over $300 an ounce. But gold equities have not yet performed to what we would expect them to perform to in a rising gold market.
So why do you think that risk isn't, that safe haven play isn't yet coming out? Is it really the Fed equation?
I think that's a big part of it. I think monetary policy going forward will dictate what the gold price does. We believe that the Fed actually finds himself in an interesting position now, unprecedented times, but either they can destroy the markets by raising rates and starting to taper their balance sheet, or they can destroy the dollar in terms of keeping rates low. And we think they will err on the side of keeping rates low.
I'd like to get your perspective from the miner's driving seat, right? As the CEO of a gold miner here. Because the criticism I often hear or the opinions from miners is that, it always lags the gold price, or even if gold is having a good run, the miners are not catching up. Do you feel that way? And is it frustrating?
Well, I think the gold industry has earned the reputation of underperforming the gold price. One of the slides I referred to in my presentation now is looking at the long-term performance of the senior gold companies relative to the gold price. And the fact is that most of the senior mining companies have underperformed the gold price over the past 30 years. You buy a gold stock with the expectation in a rising gold market, the share price should outperform the gold price. And for the most part, over the long haul, they have not. I think they're looking to find ways to correct that. And if you look at the first time, the amount of cash flow they're finally generating relative to what they've done over the past 20 some odd years is refreshing. But I think they still need to earn that reputation back as an investable space to go into.
We've heard talk of a $2,000, $2,500, $3,000 gold forecast. What do you make of those calls?
I think they're right. But then again, I've been running a gold company for 23 years. I was schooled in the gold market even back on the undergraduate days. And I am a gold bull. But I'm a gold bull now because of what's going on in the global financial system. And I think it's setting itself up for a big move in the price of gold going forward.
The miners have been complimented in this space, and I've covered it for a long time. There seems to be a lot of compliments and accolades coming in for how the miners have cleaned up their act. They're more streamlined. They're performing better. A lot are paying dividends. What do you make about the health of the space compared to, let's say, 5-7 years ago?
I think the biggest challenge in the industry today is, yes, they're doing better in terms of they have paid down debt. They're generating cash flow now that's being paid out to shareholders either in terms of dividends or share buybacks. But the elephant in the room is that they have not invested in their future in new projects. If you look at the discoveries in our space over the past 5 or 6 years, there really hasn't been any new discoveries of size in the gold space. And on top of that, the gold mining companies are not really investing cash flow back into new projects or even existing projects. So yes, they're generating more cash flow, but at the expense of their future.
Right. So how do you find that balance, right? Because, okay, great, you've been able to save more money, but like you said, less exploration is happening. How do we get to a happy middle ground there, Rudi?
That's a great question. I'm on the side of the fence where I believe the gold companies need to go back into the market and do deals again. And as the gold price goes higher, the cost of those deals will go up as well.
I want to bring up a point you made that received quite a reaction from the crowd here today about when you were talking about copper. And the Biden administration, as you know, shut down a few mines that were going to look to mine copper. And you were saying how the world desperately needs copper at the same time. We're not getting the green light for a lot of the projects. What are your concerns?
I find it ironic that the same groups of people that want green energy initiatives, whether it be electric powered vehicles, solar panels, wind turbines, and then the connectivity for that, are the same groups that are anti-mining. We need these metals to be mined to bring us into the next decade in terms of green energy initiatives. And as mines get shut down or not allowed to get built, it's going to put a lot of pressure on the market and will result in higher prices as a result.
Finally, Rudi, you're here giving us the latest from Seabridge. You just raised $225 million from Sprott and Ontario teachers. Tell us a little bit about what you plan to do with those funds.
Well, this has been a deal I've been trying to get done now for almost a year, looking at how we can fund our requirements at KSM without having big equity dilution. As you know, one of our mandates from the beginning was to try and keep the share count low. I think what I'm most proud about is after 23 years only having 78 million shares outstanding. But with that said, we want to continue on with substantial start activities at KSM that'll put our permits good out there for the life of the project. And to do that, we needed funding. So we found a creative partner in Ontario Teachers and Sprott Royalties, where they are buying an instrument for $225 million US that converts automatically into a silver royalty down the road at KSM at the start of commercial production, which means no equity dilution to our shareholders, but giving away some of the upside in the project. A lot of people don't even recognize we have silver at KSM because they always talk about the gold and the copper. Silver represents less than 3% of the revenues at KSM. So even giving up this new instrument, it's going to be less than 2% of the project's revenues going forward, which allows us to do substantial start activities and advance the project.
Rudi, finally, like I said, we're speaking here at Goldstock Analyst Day. You are listed on John Duty's top 10. Final thoughts for investors and the viewers at home, given the current landscape. Bring it home for us.
It's been a frustrating few years in the gold equities.
To say the least.
I get that.
Yeah.
As I mentioned to the conference, I've got 95% of my family's net worth in Seabridge common shares. So believe me, I have felt
and you got a big applause for that. So
yes, we did. But I think the landscape is set for a big move, not only in gold but also in gold equities. And I'm really excited about what the next 2 years will bring to our industry.
Well, like you said, you're all in.
All in.
All in. Rudi Fronk, thanks so much for catching up with me.
Thank you, Daniela. Great to be here.